Yo, what's good, hyenas? Okay, happy Saturday to you, or whatever day you're watching this, whatever time you decide to look at this playlist. We're going to be going over 3 trading setups that were successful this week on GBP, JPY, and US30. So we're going to break down what I saw, the psychology behind why I took these trades, and basically how you can catch these trades as well. So on the 16th, on Monday, this was what I saw on GJ. I don't trade London session, so I don't really pay attention to all this stuff that's going on here, but there were some nice moves that happened between London and New York, like this move right here. Good 60 pips to the upside, and that created our high of the day up here, and we had our lows down here. This is the daily open, which you'll figure out when we transition into Hyena Elite about all this stuff, but don't get too caught up on these colors and all these bars that you see now and everything that you see on your screen. In fact, take everything off. Okay, so we have our range of the day here. The day starts at 2200 London UTC, and in fact, what I do on any given day is I box the high to low from Asian session, 2200, 6. Okay, so this is the range from Asian. Okay, and you can see that this red line, this is the 50% of the range, which is once it passes the 50% below, that's discount range. Once it's above that, that is premium range. We don't sell when it's in discount. We only look for buys, and we don't buy when it's in a premium. We look for sells. Okay, that's what AKA smart money does. We sell high and buy low, right? So this is the price action that was presented. 1300 is the start of New York session. So here, put a green line. And what I do when New York session starts, there's magic times that you should be aware of. And again, when Hyena Elite starts, we're going to get deeper into these magic times. 1330. 1400. 1430. And 1600. Why don't you copy in there? 1900. Okay. So these are the magic times for New York. It's 1345. 1430. 1400. Okay, you might also notice that these times also coincide with the times of news, right? But it's also the time of the banking algorithm injecting volume into the market. Regardless of whether or not there's news, you might notice at 8:30, right? At 8:30, well, Eastern Standard Time, 8:30, that the markets might go haywire. Same for at 9 o'clock, and same for at 9:30, regardless of what is going on fundamentally, you can still see pumps of volume at these times, right? So these are the times that I'm looking for moves. I'm not really looking for moves outside of these times. If the market is not set up for my move at this time, then I'm not taking the trade and I'm looking for the next opportunity. Okay. 1900 is a time that you can get into trades, but it's also a time that you can get out of trades. If you get into day trades at this, like around these magic times, then 1900 is the time, if you don't see a pump, that you should close. All right. So let's get into the price action that I saw again. If you've been attending the last sessions that I went over, I talk about my entry parameters. These are my points of interest. Double flat tops, double flat bottoms, right? You can see that the market kind of takes off from the points where there's accepted pricing, right? Opens and equal closes. Equal close, equal open, take off. 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 Equal open, equal close, equal open, drip, right? So you see that when you can spot this pattern out, these plus the magic times, that's all the confluence that you'll need to get into the market, right? So I studied price action, as it developed. I don't typically get into trades at 8:30. That's where a lot of major news events come in, and I learned that your stop loss will not be respected if you are in on the wrong side of that move. I had like 20 lots on US30, and it slid our stop loss by like 100 points, and it was just a bad day in the market. So yeah, don't trade around super high impact news. Pretty much, like, don't try to predict the outcome, because if you're wrong, you're going to be very wrong. Okay, so around 9 o'clock, 9:30 Eastern Standard Time is when I look for moves. But just because these are the magic times, it does not mean that a trade setup is not valid if it reaches your POI at or before or after that magic time, right? So this is my POI for the day, right? What I see in price action, this looks what they would call bullish in structure. We see it creating higher highs and higher lows and moving up. But when price is bullish in structure, from the day and moving up from London session, I'm typically looking for sells in New York because the banks play ping pong between each other, right? So let's watch this price action develop. I'm going to do it candle by candle. First, this Fibonacci, right? This is the 50%. This is acting as the 70.5. This is actually just reflected. This is the 70.5 and this is the 88.6. These are discounted levels, and these are premium levels. And as you can see, price has definitely sold from the premiums, right? Bought from the discount. The 70.5 is a high probability setup, right? If price reaches down here into the 70.5, 88.6 area and it's at a POI, for instance, right here, this is a methane candle, but again, these are concepts that we are going to get into in Hyena Elite, so don't get too caught up in the concepts that if you don't understand the term, because we have a lot to go over next month. So as price action developed towards the end of at the early part of New York right here, right? So if you were looking to catch a move, you would go in like this, and I already see that these three candles right here, what's happening underneath these candles in terms of contracts being exchanged, in terms of volume inside of the market, these are compressed orders within the market. These tiny little candles right here of basically a bunch of orders, right? These wicks, all these little wicks that you see on these candles, orders being compressed into this small little area, right? This, for me, is an entry trigger, right? So we're at a 50. We're at the 50. We do see rejection wicks and liquidity being grabbed by these candles here. And of course, even though it is in a premium already, it's close to the 50% discount, so we can still take that trade and take it up to the highs that haven't been taken out yet. We can take it to here, we can take it to there. Okay, so we'll see what it does at the end of session. So close to the beginning of, this was 1300, right? At 1300, which is the start of New York, right? Which is one New York opening. This is a reversal print, right? This is a reversal print. Okay, so let's see what it does. Okay, so we're in the trade. Did have a little bit of drawdown. And again, people ask, why do I keep my stop so tight? Like, when you understand what's going on within the candles, within these candles here, compressed orders, like huge amounts of volume is being compressed into these candles. And this wick, this is liquidity. So we put our stop loss right below that wick, right? Because if it breaches this wick, could breach there. It could be, go bearish, right? And we would take the opposite position. But understanding that this is like a floor, this is what people call resistance. And we can probably go back in the market. Look, and we see where it came to before. Price exploded from this point before. That's accepted pricing. Look, again, here's this print again, right? Some might call them pin bars, dojis. But look what happened, right? Right after those 3 candles printed, it exploded about what was this? 20 pips in one candle, right? These candles are explosive. Okay, so let's continue to play this out. Okay, so it came up almost to our TP. Right, when I get close to take profit, you can take partials, take half off the tables, 60%, 80%, whatever you want to do, and then let it run. But what I'm gonna do, I'm gonna hold. Because this is really where we want price to go. We want price to sweep those highs. Okay, we're getting really close to TP. And at this point, of course, we have money off the table. We've collected partials. I don't move my stop loss because, as you can see, if we would have moved our stop loss into profit, as soon as, it went in, like, what, 20 pips? How many pips was this? 10 pips or whatever, we would have gotten stopped out, right? My mentor taught me that if you just let your trade breathe, and you understand the mechanics of the market, then, and have patience with it, then you can maximize your profits, right? So let's continue. And I know it's hard to hold trades, y'all. Definitely know. I understand. But that's the way that's going to lead to the most profits. Okay, so boom, target hit. And when price reaches our POI, these double flat tops, right, we look at price action. right? What does price action tell us? It rejected. Okay, we had a nice drop from our POI. This could have been the entry. Maybe we should have had a limit order set up there. But with the market, it always gives you an opportunity to get back in, just like here, right? You know, people are like, oh man, let me execute. Boom. Nah, you're in drawdown. If you had an entry and hasn't run too far away from your entry, go ahead and set a limit order at the place that you thought was to get into the market, right? So what we could do, continue to watch price action, and it did almost come right back up to there. But we're gonna wait to see there, we could have got into the market, but what does this look like? Right? We start having a compression of orders, right? Just like here, we're starting to get, let's see, okay, we have another compression of orders, right? So we're having a compression of orders in our POI, the double flat top. It hasn't breached, right? We're gonna go ahead. I see two compressions, right? So we're gonna go ahead and short from here. Stop loss above that wick. And we can run it back to mids. So anywhere you start to see floors, like this is compression, right? Where it took off from, compression. You can target those areas. Right, so let's see. When you really catch these compression plays off these methane candles, like this was a methane candle in the premium, right? The premium of the range, right? Above 50%. You'll get a meltdown and you'll know that you're in on the right way because you'll get an automatic reaction, right? Boom. Target hit. And keep playing it out because I want to see what it did. Melted to 50%. Okay, cool. So that was the first trade I wanted to go over. The next trade that I took was on US30 on the 18th. Let's see. Okay, so this day we had, what was going on Forex Factory? PPI day. So PPI came out less than forecast, which was bad for the currency, which should have made US30 and everything, USD, all the news came out bad for USD, which should have made, fundamentally should have made US30 go, to the moon. However, it dripped, and we can see this at the same time, right? Even looking back, it's the same patterns that I was telling you about, right? Look, we have a compression of orders right after 1330 on the bottom side. Price didn't explode. Then we had another compression of orders, right? And then from that point, sold off, right? And it definitely did not come back. But what we did for this day Let me see. It was in falling knife mode, but we were on our funded evaluation, and we're like, well, we have nothing else to lose really. We're about to just go in, and I said I was gonna the catch the re-entries, and that's exactly what I did. But I'll show you actually how I did that. I don't know if I'm gonna be able to go to the 30-second chart that far back, but we are going to try. Go to the 18th. Okay, go to the 18th. Okay, so here we were after the market started falling out of the sky. Let me actually see which places I actually entered the market. Second. Okay, so we were in 647. So 647, 605. Yep. So this is the 30-second chart. What I actually did before I start looking at orders and this, that, and the third, let me explain the psychology behind where I was entering the market off the 30-second chart. The 30-second chart tells a completely different story than every other chart, and you can get really insane entries. Like you can see compression as it's truly happening, right? Like this right here is beautiful. Like it's almost a straight line of compression, right? Market fell from there. 30 points on the 30-second chart came right up to the equilibrium of the compression and fell again, right? This wasn't where we got into the market, but just to show for reference, like when compression is happening, like these two flat candles here, train your eyes to spot this in the market, these two flat candles here. You'll see them at the valley here, compression, perfect compression candle, and a perfect setup from that compression candle, even on the 30-second, right? You want to get the most insane stop losses you can possibly ever think of getting. Do this, right? Get yourself TradingView Premium and enter off the 30-second with this strategy here. Look at this. Here's a methane candle, right? Market took off from there. Stop loss below the wick. You could have entered there. Of course, you wouldn't have gotten a crazy amount of pips, but let's look at the risk to reward. And depending on your level of psychology, like where you decided to take profit. If you're like, all right, well, this is good. I had a 10-point stop loss on it, and it ran 47 points, right? Or 50 points, and ran over 50 points. Like that's a 1 to 4 with a 10-point stop loss, right? So it's not about having a super wide stop loss so you can be right? It's about having the right risk to reward and the right understanding of the market to grab the market when it makes profits available, right? When you see this type of setup, like here's a methane, it took off from that point, right? What did it do? When it came back into this methane area, right? You mark off your methane candles when you see them, the points when the market takes off and leaves like almost no trace, right? No smoke clouds, no wicks behind it. Methane, boom, take off. See that? Methane, boom, drip down. See that? Right? It can pierce it, right? Can definitely pierce. But this is also a methane candle. Like, and again, and it fell right off the volume, right? This is where the body is of the candle is where volume starts. Like those are where the orders are accepted. This is where price closed, or this is where price opened. This is where price closed. This is the average accepted pricing, right? And you can see what people call fair value gaps. It filled this all the way to the body. It filled past the wick to the body, because the wick is manipulation. The body is volume. And what did it do from volume? Boom. Smacked it and took off to the downside, right? So as price was in falling knife mode, You know, I said I was gonna catch it on the way down again, and how did I do that? Right? Exactly by spotting out these equilibrium points in the market, right? When price came to these footprints, right? What this vision is, this understanding of the market is understanding what's going on inside of a candle as it's happening. It's more than a candlestick Bible, right? This I'm seeing the orders, right? Understanding that there are a massive volume of orders inside of these candles here. More volume that's inside of these candles. More volume that's in any of these candles. This is hidden volume, right? And you can see how the market respects that volume, right? Say, and I was entering with super laser precision on Wednesday. We were in fourth quarter mode, and it was going beautifully, right? Stop loss above there, and we were riding these trades down, like holding. We were planning to like hold all day, but when we found out we had 14 days left on the evaluation, we were like, well, never mind. Don't have to be in fourth quarter mode. But US30, it fell out the sky. And we did catch multiple plays on the way down again, just by using the strategy, waiting till price action gave us an opportunity, a clear opportunity, right? This pattern here. Let's see if we can spot other opportunities. Price got up to here. You can see like this is a methane setup. It was almost a double print, but it came right to the body, to the volume, right? And we were selling this all the way down to the floor on US30, right? Catching every methane entry that I possibly could, right? Because when you see the shot, you take the shot, right? If you don't have the courage to take the shot, you're never going to make the money that you want to see, right? And I think down here, this was my lowest entry on US30 at 510. So I didn't sell it anymore, but we should have held because it did drop like 500 points from there, right, until the next day. And it would have been like a 7% day, but there is no shoulda, coulda, woulda. You just do better next time, right? You take notes, you adjust, and you don't let any one trade that you take get to you or rattle your fortitude, your mental, right? So the last trade that I want to go over is on GJ. I took. Was there more trades? Yeah, there definitely was. Okay, so there's actually a trade on the 19th that I took. This was the initial setup, and again, this was during New York, right? Like right at the bell, like just how you can trade US30 at like 9:30 and have like crazy results. You can trade GJ, most USD pairs. I know GJ isn't USD, but JPY. Whenever money is leaving the US, it's going into Japanese bonds, right? And when money's leaving Japanese bonds, it's going into the US because it's like a safe haven, right? People like to move their money into Japanese bonds to secure their funds, make sure it's not rising and fluctuating with the markets, and vice versa. Use it as like risk mitigation, but understand that when these, again, magic times. I'm just going to turn this on the Neo Hyena Vision, which everybody who's really locked in with the gang is going to get access to this in February when we start doing Hyena Elite. It'll have the magic times painted on your screen, so you won't have to worry about oh my gosh, is it a magic time? Is it not a magic time? Blah 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 So on this day, I actually discovered something pretty amazing. Um, and this was having beyond having like double flat tops, double flat bottoms. For whatever reason, on the 19th, let me look on the 19th. What happened on the 19th? So unemployment claims, I guess. Philly Fed, manufacturing index, building permits, housing starts. There was a lot of news that came out at 8:30, and as a result, GBP JPY had this. I call it like a lightsaber, but it's not really a lightsaber. This one does not have crazy long wicks on it. But when I looked at this, right, I went to I think on, did I look at it on the 32nd? Yeah, I did. Okay, so when price actually came, uh, I look at the chart on the 32nd when I'm trading now, because it just gives me a clear picture, like a more precision look at what's going on. I'm gonna delete this Fibonacci. I'll explain later. So when I was trading this, I did have some drawdown on this trade, and I did, like, it was scary, it was spooky. Like, I had a 5 pip stop loss, and it started coming close to my stop loss. I definitely was about to close, but I just, the risk is, you're gonna risk. You're either gonna accept the risk that you're in, or you're not. And if you close your trade early and then it goes in your way, then you have to live with that, right? So I decided to hold, and it was the right thing to do. This trade was a great trade. But what I noticed, I entered, let me see, was it the 5 minute, 1 minute? Um, okay, so yeah, on the 1 minute, why did I enter so high? I think that price was down here. It had reached this double flat top, and it printed this, the methane candle that you see, right? This is I used to call these the upside down Gerald. If you all watch Hey Arnold, like a flat top, right? But it has no wicks. That's massive volume. And then it printed a methane candle in that discount, right? So what I did was I entered the trade, but like it's like I saw this candle print, but as soon as it printed, like it just pumped, and I thought that was the entry. So I was like, dang, I didn't get it down here where I wanted to. My stop loss would have been like 2 pips, but it pumped up here, and I was like, dang. But all right, I was still in the entry. So it was going, and the target was the daily open, right? This yellow line here, 63 pips. Okay, so that was valid. It was a valid entry. However, in my reanalysis of the market, because what you have to analyze the market after you finish attacking it after every battle, right? I saw this wick here, and I decided to fib it out just to see what would happen. And I noticed that wick, the manipulation, when we measured the manipulation, it almost gave, I mean, it did give a perfect 70.5% entry, discount entry off the manipulation wick. And like, it's just crazy to me. Yeah, it would have been a 1 pip stop loss. So yeah, I'm definitely, when I see candles like this in the future, because every candle does tell a story. Every candle tells a story. You might not realize it, but every candle can be important in the market, right? So this one candle on the 1 minute, I measured the manipulation, right? And it would have given me that pure 50% entry even here. I mean, even a 50% entry here, you still would have had a 2 pip stop loss. Like that's insane. That's insane, right? So the next entry that I took, again, I was looking, this is a magic time, 1600, right? I look at the clock about 5 minutes before the magic time, right? And as soon as I looked at my chart, like I don't know if I was looking at the 1 minute or the 5 minute, but even on the 1 minute, right? I see that this is a methane candle, and of course I have it already drawn out. But let me actually measure this, because I haven't measured this with the fib yet. Let me see. Okay, so it definitely pierced all of that, but there is a wick that was longer. Let me see. Measure this whole wick. Man, it did pierce through that pretty. Thing is, it's not significantly, because this is the 1 minute chart. That was like a 10 pip, a 20, 3 pip. No, 55 to 40, 1.6 pip. I'm gonna put 2 pip stop loss. Really, if you measured this long manipulation wick that was left behind the methane candle, just thinking about how we could have caught this entry with the previous technique that I just spoke about. But even still, I mean, that's a 3 pip stop loss from the 50% of the methane candle, which that's typically where I try and get my entry, from 50% of the methane, right? So like right in the middle. But as you can see, this one, if you put your stop loss beyond the wick of this methane, which realistically you should have put it here because there was manipulation right behind it. So you should have put it down here. But either way, and I did do that, either way, with a 4 pip stop loss. So that, and still the next target is the daily open. Right? And then the last trade that I took, I think I just saw opportunity and I wanted to see if it would go. And it definitely did. Again, this little box here, like this, and of course you're going to be able to spot this more better and better, but this is like almost looks like equal pricing to me, and that's why I decided to enter the market here, because when you start to see this type of compression, and you'll train your eyes for this, right? Like here, compression, boom, compression happened at a peak, got that sell off, right? And when you start to see compression happen, again, you'll see like compressions happening at the daily open, like clear as day, starts to sell. But it did break this daily open, and these orders that I had on Thursday. Go to the 15-minute chart. Like I'm about to really start holding these trades on GJ, because these things ran so crazy, like 276 pips from the first entry, 269 from the second, and 232 from the third. Well, and then there's that one. I don't even know. Like the buy from here never got stopped out. Oh yeah, it did. Never mind. We would gotten stopped out here. So that's great. Glad we didn't hold. Glad we didn't hold that one. So with all that being said, I hope you got some value out of this breakdown. Gained a little bit more understanding. Don't rush the process. Everything that I just said, it's a lot to account for when you're trading. And it just comes with practice at the end of the day, which we're going to get a lot of in February. Expect homework. We're gonna have high level knowledge flowing through the pipeline, and you have to show up and play ball if you want to truly utilize it. So, yep, I'll see y'all at the top because the bottom is too crowded.